Hello traders, Gary Wagner here. Just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, December 18th, 2018, and this is the daily report for gold and silver. With the exception of gold, we do have the precious metals complex lower today. Gold is currently trading up by about $1.50 on the day, with most active COMEX's February contract currently fixed at $12.5330. Now, we do have declines in silver that amount to about 5 cents, currently fixed at $14.70. Platinum is down about 0.5% on the day. Net decline $4.40 at $791.50. And palladium giving up about 0.5% today, $6 at $11.76. Now, that's all in light of neither headwinds nor tailwinds being produced by the dollar, as the dollar is in essence unchanged on the day. It was trading dramatically lower, but has recovered throughout the trading session, currently at 96.54.5. And the Dow has been all over the board along with all equities, currently up about 82 points, and we are just going into the close right now at 23,675, but it had been as high as 23,927, so about 300 points from here, with a Dow up about 400 points on the day. The same with the Standard & Poor's, well off of the highs, but gaining 0.25% today, about 6 points at 25.53. And lastly, the NASDAQ Composite up sizably compared to the other indexes, about 0.75% at 68.06. So traders, as I said, gold is the only precious metal to be trading higher on the day, up a little bit over 0.1%, so not that much of a move. And traders are awaiting tomorrow's Fed decision and some insight into how they wish to play their monetary policy next year. On today's show, what I want to do is to go over some parameters, because what happens when these Fed decisions come out, we are flat with no active trades, but if certain parameters are met, I am going to recommend that you move into the market from the long side, on the sidelines, or actually short the market. Here's what we're looking at. First of all, it is highly anticipated that there will be an interest rate hike revealed tomorrow, roughly 25 basis points, moving Fed funds rates up for a fourth time this year. If in fact that is what happens, we can expect the majority of that rate hike to have been factored into the market, although that will be bullish for the dollar and bearish for gold. Traders will then move their attention to the statement itself and look for some key statements, and those statements are going to be surrounding two basic topics. The first topic is whether or not our current interest rate is at a neutral level. The word neutral to the Fed, of course, represents that they're on target and they're not looking for very many more rate hikes. So if the language in tomorrow's statement is saying something like we are very close to or at a neutral level for interest rate hikes, they're really saying that they're going to slow down the pace at which they've been raising rates, and they will be much more dovish. That, of course, would be bearish for the dollar and bullish for gold. If we get a scenario where they do mention normalization, or the fact that they're not looking to raise rates as many times next year, in other words, you would look for language that basically says we are going to continue to be data sensitive. And that's kind of a buzzword for saying they're not going to look at a static dot plot as much as they're going to be looking at what's going on in the economic environment and whether the economic environment can handle a rate hike at that given time. Because we have seen extreme volatility and downward pressure in U.S. equities as they have ratcheted up rates 4 times this year. Now, considering that the Fed has only raised interest rates, I believe, on 8 occasions since 2015, that means that they have pretty much doubled the amount of rate hikes that we saw this year compared to 2015, 16, or 17. And that, to me, is a huge difference. That is a very, very hawkish Fed, and that's what we've seen. We've seen that weigh upon the market. So look for those keywords and look to see if there's an interest rate hike. Now, if by chance they do not raise rates tomorrow, that would be extremely bullish for gold. We would want to hop along on the long side of the market once that announcement came out. Now, of course, I will send out a special trade alert tomorrow. However, this market will move fast as this statement is released. So because of that, you have to be ready to react on your own. But I think I've laid out specific parameters to look for and to guide you as to the direction of gold from this point forward as we go into the end of the year. So traders, to clarify the information to look for tomorrow, the first thing you want to look for is whether or not they announce a rate hike. If they announce a rate hike, the fourth this year, then I believe it will be largely already factored into the market, and you will need to focus on what they're looking at next year. If they do not announce a rate hike, that's going to be extremely bullish because that is not factored into the market and almost certainly cause the precious metals to run to the upside, and that would be a trigger to go in and initiate a long position in gold. If in fact they announce a rate hike, then we're looking for whether or not they believe that current rates are close to normalization, because that is the buzzword for their pace next year. If it's close to normalization, that means we don't expect many more rate hikes and the Fed to really ease their foot off the pedal. And that, of course, would be bullish for gold. However, you would have a bearish sentiment from the interest rate hike that's largely factored in and a bullish tone, and those could kind of wash each other out. So we'll have to listen very, very closely and intently to the words of the Fed and then act accordingly to the parameters that I've just presented. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for Fed Decision Day. Bye-bye.